Welcome back, everybody, for another deep dive. This time, we're going to be taking a look at Bitcoin,
Oh, yeah.
and specifically the white paper Bitcoin, a peer-to-peer electronic cash system by Satoshi Nakamoto.
Yeah, this is really the paper that started it all.
It really is, and it's amazing how
And
much.
it's only 9 pages.
Yeah, it's only 9 pages, and it's incredible how much is packed into such a concise document.
Right.
So let's just jump right into it. What exactly was Satoshi trying to solve or create here?
Well, I mean, the paper is called Bitcoin, a peer-to-peer electronic cash system. So,
Right.
in essence, it's electronic cash, but with a twist.
Okay.
It's a way to pay online to another party without going through a financial institution.
Okay, so like cutting out the middleman, essentially.
Yeah, exactly.
That's a pretty bold idea for a financial system. How do you build trust, though, if there's no bank involved?
That's where the idea of trust is replaced with cryptographic proof.
Okay.
And that's really what Bitcoin is all about. And that cryptographic proof is really the solution to a major problem in traditional online transactions.
Okay.
Which is the traditional online transactions, they rely on trust,
Right.
a whole chain of trusted parties.
Yeah.
Every time you buy something online, you're trusting the merchant, you're trusting the bank,
The credit card company.
credit card company. There's
All these different.
Yeah, there's all these weak points in the chain.
Yeah, it is kind of crazy when you think about it that way.
Yeah, and all those trusted parties add friction.
Right.
The transactions can be reversed. There are fees. And the whole security of the system relies on the weakest link.
Yeah, all this data breaches we hear about.
Exactly. So Satoshi envisioned a system that didn't rely on trust,
Okay.
that would be more secure, cheaper, more efficient.
Right.
And that's where Bitcoin comes in.
Okay, so Bitcoin is the solution.
Yeah.
But how do you solve something, like how do you prevent somebody from just copying a digital coin and spending it multiple times?
That's the famous double spending problem.
Right.
That's the key challenge with any digital currency.
Right.
So Satoshi's solution begins with digital signatures.
Okay.
So each time a Bitcoin is spent, the spender digitally signs information about the previous transaction and the new owner's public key.
Okay, so you're creating a chain of ownership, basically.
Yeah, a chain of ownership that's transparent and traceable.
So everyone knows where each Bitcoin has been.
Exactly. You can see the whole history of a coin.
Okay.
But how do you know the coin hasn't been copied and spent somewhere else
Right.
when there's no central authority checking?
Yeah, that's a good question.
That's where the idea of the timestamp server and proof of work come in.
Okay. Those are terms that you hear a lot, but it's pretty abstract
Yeah.
when you're first, getting into this.
Right.
So how does the timestamp server work?
Well, the timestamp server is essentially a network of computers
Okay.
that all work together to verify and record transactions in chronological order.
So it's like a public ledger.
Yeah, it's like a public ledger for Bitcoin transactions.
Okay.
And these transactions, they're collected into blocks that are added to this chain of blocks,
Right.
which is the blockchain.
Okay.
And to add a block to the chain, computers on the network, we call these miners, compete to solve complex math problems.
Okay.
The first one to find a solution gets to add their block to the chain.
Wow.
And they're rewarded with newly created Bitcoins.
Oh, so that's how mining works.
That's mining. Yeah.
It's like this puzzle race.
It is.
And the winner gets paid in Bitcoin?
Exactly. Now, you might think that's a little strange.
Yeah.
But making it computationally expensive to add blocks to the chain is what makes it so secure.
Okay.
Because to change something, you'd have to redo all the calculations for that block and every block after it.
Okay.
And not to mention, you have to do it faster than the rest of the network,
Right.
who are constantly adding new blocks.
So it's like trying to cheat at a game that's constantly evolving. Yeah.
And everyone's watching you.
Exactly. So be caught immediately.
It's designed to make honesty the most rewarding strategy.
Right.
What's fascinating is it aligns incentives to create a trustworthy system,
Yeah.
all without a central authority.
Well, we've kind of covered how transactions work and how the network agrees on what's true.
Right.
But I think we need to take a little bit deeper of a dive into how the network actually functions,
Okay.
like on a day-to-day basis.
So it's all based on a system of broadcasting and verification.
Okay.
So imagine a network where everyone is constantly sharing information.
Okay.
So when you want to send Bitcoins,
Yeah.
you broadcast your transaction to the network.
Okay.
Special computers called nodes They gather these transactions,
Yeah.
bundle them into blocks.
So they're like passing the transaction information around?
Yeah, that's a good way to put it.
Like a relay race almost?
Yeah, like a relay race, and then the miners jump in
Okay.
to try to solve those complex math problems. Earn the right to add their block of transactions to the chain.
And then they broadcast their block to the whole network once they win.
Exactly.
And then everybody checks it.
Yeah, everyone double checks it to make sure all the transactions in the block are legitimate.
That they haven't already been spent.
Right, and if everything checks out, each node adds that block to their copy of the blockchain.
So everyone's basically agreeing on what the true blockchain looks like?
Exactly, because they're all following the same rules.
Right.
And constantly verifying each other.
Okay, that makes sense. But what if some of these computers go offline or information gets lost in the process?
Well, that's the beauty of it.
Okay.
The Bitcoin network is really resilient.
Okay.
So even if some nodes go down or messages disappear, the system can keep working.
Okay.
As long as the majority of the computing power is controlled by honest participants.
Okay.
There's no single point of failure.
So it's like a digital democracy almost, where the majority rules not in terms of votes,
Yeah.
but in terms of like the computing power that's dedicated to keeping the system running.
That's a great way to put it.
Honestly.
And that's what makes Bitcoin so resistant to censorship
Okay.
or control by any single entity.
All right. So we've got kind of the basics of transactions down, how the network works.
Yeah.
But I'm kind of curious about the incentives for participation.
Yeah.
Like, why would somebody want to run a node or even more demanding become a miner?
Well, as we mentioned, the miners are rewarded with Bitcoins for securing the network.
Right.
That incentive is built directly into the protocol.
So the more computing power you contribute,
Yeah.
the better your chances of earning some Bitcoin.
Exactly. And to keep things balanced, the system automatically adjusts the difficulty
Okay.
of the mining puzzles as more miners join.
So it prevents the system from being flooded with Bitcoin, essentially.
Right. It helps to maintain a steady rate of new Bitcoins coming into circulation.
Which would decrease their value if there was a flood. But wouldn't this mean that eventually, when all the Bitcoin's mined,
Yeah.
there's no more incentive for miners to participate?
That's a great point. And Satoshi anticipated that.
Okay.
He proposed that in the future, as the reward for mining new blocks dwindles, transaction fees will take over
Okay.
as a primary incentive for miners.
Okay, so the system shifts from rewarding the creation of new coins to rewarding the processing of transactions.
Exactly.
That's pretty clever. It ensures that the Bitcoin network can sustain itself.
Right. It shows the long-term thinking
Yeah,
that went into this,
for sure.
designing it as a self-sustaining system.
Yeah, but let's not get ahead of ourselves.
Right.
There's still a lot more to unpack about how Bitcoin manages all this data, how it allows users to verify payments, and how it addresses privacy concerns.
Yeah, good points.
So let's dive into those next. So we talked about how Bitcoin handles all these transactions and how it keeps everything secure. But I'm wondering, with millions of transactions happening every day, how does Bitcoin even manage all that data?
That's where another clever piece comes in. It's called the Merkle tree.
Okay.
And this is a special way of organizing data that allows for efficient storage and verification,
Okay.
even as the blockchain grows.
That sounds pretty technical. Can you break that down a little bit?
Yeah, so imagine a pyramid
Okay.
with all the transactions at the bottom. Each level up combines the data from the level below it
Okay.
until you reach a single point at the top called the root hash.
Okay.
And that root hash represents all the transactions in that block.
So instead of checking every single transaction, you can just check the root hash
Exactly.
to verify if a transaction is included.
Exactly. It's brilliant.
That's really cool.
That's a brilliant way to confirm information
Yeah.
without having to go through all the data.
Right.
And this structure also allows older transactions to be pruned away.
Okay.
So you only keep the essential information.
So even with the blockchain growing, so much storage space isn't really a concern?
Even if you had to keep all the block headers in memory,
Okay.
which are those root hashes we talked about,
Right.
it wouldn't take up that much space.
Okay, that's good to know. But what about people who don't want to run a full node?
Yeah.
How can they verify payments without downloading the entire blockchain?
That's a great question. And Satoshi thought of that too.
Okay.
He came up with something called Simplified Payment Verification, or SPV.
Okay.
And this allows you to confirm a transaction without running a full node.
So it's like a shortcut for verifying payments?
Yeah, think of it as asking a trusted friend for confirmation.
Okay.
So with SPV,
Yeah.
you can query network nodes.
Mm.
Those are the computers that store the full blockchain to
Right.
get the block headers,
Okay.
and some extra information called Merkle branches.
Oh, okay.
And these branches, they help you trace a specific transaction
Mm-hmm.
back to the root hash of the block that it's in, confirming that it's part of the official blockchain.
So it's like getting a summary of the information you need without having to download the whole book.
That's a good analogy.
Okay.
It makes Bitcoin accessible to a wider audience without sacrificing too much security.
Okay, but there is a slight vulnerability, right?
There's a slight vulnerability.
What is that?
If someone managed to control a large part of the network,
Okay.
they could potentially create a fake blockchain
Right.
and trick SPV users into believing it's real.
So it's not totally foolproof.
It's not foolproof, but there are ways to mitigate that risk.
Okay.
The Bitcoin community is pretty vigilant.
Mm-hmm.
If nodes detect something fishy,
Yeah.
like an invalid block, they can send out alerts
Okay.
to warn everyone.
So it's like a neighborhood watch system.
Yeah, everyone's looking out for each other.
Okay, that makes sense. So basically being informed and staying up to date is important for
Yeah.
anybody who's using SPV.
Right. And for businesses that are handling lots of Bitcoin transactions,
Yeah.
it's always best to run a full node.
Right.
That's the most secure option.
For the everyday user, SPV is a pretty good balance, though.
Right. It's a good balance between security and convenience.
Okay, cool.
Yeah.
So we've covered how Bitcoin handles all this data.
Yeah.
We've covered how users can verify payments.
Right.
But what about like more complex transactions? Like
Right.
if I want to combine multiple smaller amounts into a larger payment or split a payment into smaller chunks, can Bitcoin handle that?
Absolutely.
Okay.
Bitcoin transactions, they're actually very flexible.
Okay.
They can have multiple inputs and outputs,
Okay.
and that's what allows for combining and splitting value.
So you could have one transaction pulling Bitcoin from several different addresses that you own
Yeah,
and sending it all to a single recipient.
exactly.
Or you could split a payment.
Yeah.
And send smaller amounts to multiple people.
Yeah, you can do all of that.
That's pretty versatile.
Yeah, and there's another interesting point here.
Okay.
Even if a transaction is part of a long and complicated chain
Mm-hmm.
of previous transactions,
Okay.
it can still be verified very efficiently.
Okay.
You don't need to go back and trace every single step.
So it's not like untangling a giant...
No, not at all.
Okay.
The blockchain makes it very easy to trace the flow of value,
Mm-hmm.
even in complex scenarios,
Right.
without getting bogged down in the details.
Well, that's good. But there's one more kind of big question
Yeah.
that I keep coming back to, and that's privacy.
Right.
If every transaction is public and recorded on the blockchain, doesn't that mean everybody can see where my Bitcoins are going?
Yeah, that's a common concern.
Right.
And it's something that Satoshi addressed in the white paper.
Oh, okay.
So Bitcoin's approach to privacy is
Mhm.
actually quite different
Okay.
from the traditional banking model.
How so?
So banks achieve privacy by limiting access to information.
Right.
Bitcoin uses anonymity.
Okay.
So you use public keys to send and receive Bitcoins.
Mm-hmm.
But those keys aren't directly linked to your real-world identity.
So even though people can see that a transaction happened,
Yeah.
they don't know who's behind it.
Exactly. It's like sending a postcard
Okay.
with a message, but no signature.
All right.
Anyone can read the message, but they won't know who sent it unless you tell them.
Right.
And to further enhance privacy,
Okay.
Satoshi recommended using a new key pair for each transaction.
Oh, okay.
This makes it much harder to link different transactions back to the same person.
So like using a different pen name every time you write a letter to the editor?
That's a good way to put it.
Yeah.
Of course, it's not a perfect system.
Right.
Some linking is unavoidable,
Sure.
especially if multiple inputs are coming from addresses that are controlled by the same person.
Right. It's going to be pretty obvious that those are all coming from the same person.
Exactly. But overall, Bitcoin offers a significant level of privacy
Okay.
compared to traditional financial systems
Yeah.
where institutions have access to all your data.
So Bitcoin offers more privacy than I initially thought.
It does.
But what about security in terms of somebody trying to take over the network or alter the blockchain?
Right.
How does Bitcoin protect against that? Okay, so we've talked about how Bitcoin prevents that double spending problem,
Right.
how the network is designed to be secure.
Yeah.
But I'm thinking, like, what about attacks on a larger scale?
Yeah.
Like, could somebody with enough computing power rewrite the blockchain?
Right. To their advantage.
Yeah.
It's a question that comes up a lot.
Yeah.
And the answer is a little more nuanced than you might think.
Okay.
Let's say a hypothetical attacker manages to create a longer chain
Okay.
than the one everyone else is using.
Right.
Even then, they couldn't just like make arbitrary changes,
Okay.
create bitcoins out of thin air,
Right.
or steal funds.
Okay.
The rules of the system are enforced by the network itself.
So there are still rules they have to follow.
Absolutely.
Okay.
Other nodes would reject invalid transactions.
Right.
So really all they could try to do is change their own transactions
Okay.
to like get back money they already spent.
So it's kind of like trying to cheat at a board game where everybody else is following the rules and can see what you're doing.
Exactly.
Okay.
But how do we even measure how secure the Bitcoin network is?
Right.
Well, Satoshi offered some insightful calculations
Okay.
in the white paper to think about this.
Mm-hmm.
He looked at the probability
Okay.
of an attacker successfully creating an alternate chain.
Okay.
And he had this clever analogy to illustrate it.
I love a good analogy, so lay it on me.
So imagine a gambler
Okay.
with unlimited credit,
Mm-hmm.
but they start off in debt.
Okay.
And they keep playing, trying to get back to even.
Mm-hmm.
But the further behind they fall,
Yeah.
the less likely they are to ever catch up.
So the attacker's like the gambler.
Right.
And catching up means overtaking the real blockchain.
Exactly.
Okay.
And so the longer the honest chain grows,
Right.
the more work the attacker has to do.
Yeah.
And the less likely they are to succeed.
So it's like trying to outrun a snowball rolling down a hill.
Exactly.
It's just getting bigger and faster as it goes.
That's the idea.
Okay.
Now, to apply this to Bitcoin,
Mm-hmm.
let's say you're receiving Bitcoins.
Okay.
How long should you wait
Right.
to be sure the sender can't reverse the transaction?
Yeah, that's a good question because you don't want to, send a good or service and then have the payment disappear.
Exactly. And Satoshi's solution to this was to wait for confirmations.
Okay.
So confirmation means that your transaction has been added to a block,
Mm-hmm.
and then more blocks are added on top of it.
Okay.
And the more blocks that are added,
Yeah.
the lower the probability of a successful attack.
So it's kind of like waiting for concrete to set.
Yeah,
The longer you wait, the stronger it gets.
exactly. So there's a way to actually assess the risk
Okay.
and decide how long to wait.
What kind of time frames are we talking about here?
Well, it depends on the attacker's assumed power. Satoshi calculated that if the attacker has a 10% chance of finding the next block,
Okay.
waiting for 5 confirmations
Mm-hmm.
reduces the risk of reversal to less than 0.1%.
Wow. And I imagine waiting for more confirmations makes it even less likely.
The probability drops dramatically
Okay.
as the number of confirmations increases.
It was pretty amazing how Satoshi thought through all of these potential problems and came up with these solutions.
It really is.
Yeah.
But beyond these technical details, it's important to remember the big picture
Yeah.
of what Bitcoin represents.
Right.
It's really a challenge to traditional financial systems.
Yeah.
It's a potential force for change in the global economy.
Yeah, we said the Bitcoin's revolutionary, but what could that revolution actually look like?
Yeah.
What are the real-world implications of something like this?
Well, imagine a world where billions of people
Hmm.
who are excluded from traditional banking systems
Okay.
suddenly have access to financial tools.
Right.
Bitcoin could really be a game changer for financial inclusion, especially in developing countries.
So it's not just about technology, it's about empowering people.
It's about giving people control over their own finances.
Yeah.
With just a smartphone and an internet connection, anyone can participate in the Bitcoin network.
Right.
No more relying on banks that might not serve their needs
Mm-hmm.
or governments that might restrict their access.
Yeah, that's powerful. But let's be realistic for a second.
Sure.
What are the downsides? There's got to be some risks and challenges to something as disruptive as this.
Of course, every innovation has its challenges.
Yeah.
Volatility is a big one.
Okay.
The price of Bitcoin can fluctuate wildly,
Right.
which makes it risky for some.
I've heard stories of people getting rich and going broke overnight.
Exactly. So that volatility is a double-edged sword.
Yeah.
It creates opportunities for speculation,
Mm-hmm.
but it also hinders its adoption as a stable form of everyday payment.
Sure.
Then there are security concerns.
Okay.
While the network itself is incredibly secure,
Mm-hmm.
individuals can still be vulnerable to hacking or theft
Right.
if they're not careful.
So just like with any valuable asset, you got to take precautions.
You have to protect it.
Yeah.
Strong passwords, secure wallets,
Right.
being aware of phishing scams.
Yeah.
All that is essential.
Okay.
And then there's the question of regulation.
Right.
Governments around the world are still figuring out
Yeah.
how to approach Bitcoin,
Right.
and that uncertainty can create challenges.
So it's still a little bit of a Wild West out there.
In some ways, yes.
Yeah.
But that's also what makes it so exciting.
Right.
Bitcoin represents this fundamental shift in how we think about money and finance.
Yeah.
It's a technology that has the potential to reshape the global economy.
Yeah.
But how that unfolds is still being written.
Well, it sounds like we've only just scratched the surface of what Bitcoin could become.
Absolutely. And that's the beauty of it.
Yeah.
This deep dive has given you the foundational knowledge to understand how Bitcoin works. But there's so much more to explore.
Right.
It's up to each of us to keep learning,
Yeah.
stay informed, and decide for ourselves what role we want to play
Yeah.
in this unfolding revolution.
Well said. To all our listeners out there, we encourage you to continue your own deep dives into Bitcoin.
Yeah.
It's a fascinating world with endless possibilities.
It is.
And who knows, maybe you'll be the one to make the next big breakthrough in the world of decentralized finance.
Until next time, keep exploring, keep questioning, and keep pushing the boundaries of knowledge.
I like it.